And now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal, the full story. Real talk about money, markets, life. Now, it's The Real Investment Show with Lance Roberts. Presented by RIA Advisors.
And welcome to the show. This morning is, of course, the Hump Day edition of the Real Investment Show. Of course, today is also Fed Day. So this afternoon we'll hear from the Federal Reserve. Will they, won't they cut rates? They're not going to cut rates today. But it'll all be about whether or not they do something with QT, which is the quantitative tightening, where they're reducing their balance sheet. Now, they reduced that before from $25 billion a month to $5 billion a month. And so that was already reduced. So the question today is will they remove that entirely? Now, if they were reducing just treasuries, they were still keeping the schedule for mortgage-backed securities, which they want to get off their books. So the question today will be, will they reduce QT more? Or will they say something about potentially cutting rates? That's going to be kind of all the news today, this afternoon. But this morning, markets are rallying because China has agreed to now meet with President Trump in Geneva to talk about tariffs. And there's already talk about a $40 billion reduction in tariffs by China. So this has gotten markets lifted a bit this morning. So futures are pointing higher. We'll see how that goes. But again, this is just the initial talks, but it's a breakthrough that China agreed to have these talks. And of course, that was also yesterday the news that kind of lifted the markets early in the afternoon, and markets kind of rallied today, but then sold off at the end of the day. Now, as we've talked about over the past couple of days, the one difference we've seen to the markets in the last 2 days is end of the day selling rather than end of the day buying. So that suggests that there's still some liquidation, by institutions. They tend to trade late in the afternoon. We've been seeing that lately. So again, not surprising. We've had a decent rally in the markets, and so taking a little bit of profits off the table, those type of things. So, that's kind of going on. Outside of that, this morning's going to be, a bit about the China trade, but really all eyes are focused on the Fed this afternoon. Of course, we'll be parsing all of that data this afternoon once they come out. So this market could be up a lot this afternoon, could be down a lot this afternoon. Don't know. Just be aware. We're going to have some volatility tomorrow. Michael and I will get into what they said, what it means for the markets, what does it look like for rate cuts going forward, et cetera. So we'll kind of get into a lot of data tomorrow with Michael Leibowitz here on the show. Outside of that, economic data continues to be okay. The New York Fed has slightly downgraded, so the trade deficit came in a little bit larger than expected, but that's still a lot of this tariff issue that's been going on. So again, that's been affecting the trade deficit. That brought the second quarter estimate from the New York Fed down to about 2.3 from 2.4%. So again, that first quarter weakness that we saw that was almost entirely front running of the tariffs and that big trade deficit that we had, that's going to be reversed in the second quarter. So Goldman Sachs yesterday, they put out that they think second quarter is going to be around 2.2%. We've got the Fed coming in about 2.3. So we'll kind of see how this kind of matures over the month. But again, that first quarter weakness in GDP that we talked about this, we said, look, that's probably going to be an anomaly because underneath the surface, once you strip out that trade deficit, it was probably about a 1.25% GDP growth when you take a look at personal consumption expenditures and the other things that were in that report, which were doing fine, right? There was no real evidence of economic weakness or recession risks, should we say, in that report outside of that trade deficit. So a lot of people focus on the headline numbers as, see, recession's here. No, you got to strip that out because, again, the bigger components were doing just fine. We had an anomaly coming in with this trade deficit. Going to have a little bit of that impact in Q2, but likely we're going to see somewhere probably closer to 1.5% to 2% GDP growth by the time we get to the final end of the quarter reporting period. So again, just kind of keep a watch on that. The employment numbers are okay. ISM services, manufacturing, they're doing all right. So again, there's not a lot of recession risk right now at all. But let's talk about what you need to know before the bell this morning. So again, we talked about yesterday, the markets have had this historic run, sold off yesterday, again, a little bit more sitting. We actually tested the 50-day moving average. So again, if this market can bounce today and hold, that will actually be a decent first test of this, of turning the 50-day moving average from resistance back into support. So we'll have to see what happens today. If we fail there, then 5,400, which is where the 20-day moving average is going to be the next level of support. So there's some decent level support. There's about 100 points, 150 points of downside right now. Upside is going to be limited to about 57.30 at the moment as well, because that's going to be where we're about to coalesce the 200-day and 100-day moving averages. So a lot of pressure about to come into the markets at this little bit higher level. But again, the markets are performing very well. There's nothing to really be overly concerned about. We've had this very nice kind of rising trend line at this point for the markets. Retail investors bought this dip very heavily. If you take a look at 0-day traded options, they're at a record right now. The number of retail investors that were buying equity funds and individual equities had a big spike. So during this entire bottoming process, retail investors were in buying, kind of this whole period. So the question is are they right? And that this is, just a short-term blip, or is this going to be a bigger corrective cycle like we saw in 2022? Where these rallies had bigger corrections and retested previous lows, et cetera, and kind of really ground out that retail investor. Because we saw this same type of environment early in 22. We saw retail investors buying the dip. By the time we got to October, they weren't really buying it anymore. So again, if this is a longer drawn out correction cycle that we're in, we're going to grind that retail investor out of the market. So it'll take some time to do that. But right now, they've been on the right side of the trade for sure. Professional investors actually sold out of a lot of this market. So they've been on the wrong side of the trade. They've also got to play catch up here. So that's one of those things that potentially gives the market a leg of support. And as we talked about previously, the buyback window is now fully open. And through May, so far, the level of buyback announcements has now reached a new record. If this current pace continues, we'll exceed $1 trillion in buybacks by the end of this year. So again, that whole buying support, we had Apple at $100 billion, Google at $70 billion. NVIDIA is going to come out and report later this month. They'll announce another big buyback as well. So, you start stacking all these things up. That's a lot of buying power for the markets, and that continues to give us a bit of support here for markets. So again, I think pullbacks here will be decently shallow. So you can use those to, you get a pullback to say 5,400-ish, right around that 20-day moving average. If that happens, that's where you reduce your hedges, put a little bit of cash to work, et cetera. But again, there's a lot of risk right now sitting right up here at that 200, 100-day moving average. And that 100-day moving average is about to cross below the 200-day here in the next week or two. So again, that's going to just kind of apply some downward pressure. So again, just be careful with the risk you're taking in your portfolios. And as we talked about the last couple of days, this rally was, a good gift to rebalance risk in portfolios. I'm not saying that the markets are about to have this big crash, but as we said before, if you were stressing out over that whole decline, you just had too much risk in your portfolio. So, use this as an opportunity to clean up that stuff that wasn't working, didn't work, stuff you took too big of bets on. Reduce those position sizes as well, just kind of work through that process. Lastly, just keeping a watch on the dollar, because this is really the driver for everything right now in terms of risk. Dollar's starting to try to base here a bit. We're back on a buy signal, but have not really been able to get back above that 20-day moving average. If we can start to get some strength, kind of in the dollar a bit here and start to push that higher, that'll help give, lift back to equities as well, because that'll start to attract foreign capital flows back into the U.S. And again, that's one thing that's been, the weakness of the dollar has extracted capital from the markets during April. So if we can get that reversal in the dollar to occur, then that's going to start bringing dollar value back into U.S. equities, or at least equity demand for the U.S. dollar through equity exposure. So again, that's what you need to know before the bell this morning. All right, we'll come back, pick up with Danny Ratliff. Lots of stuff to talk about this morning. Don't go away.
Get Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
Attention Chevron employees and anyone else receiving or considering a company severance package. We know the process can be intimidating. What should you know to maximize your payout? Lump sum or pension annuity, retirement plan rollover or not? What about tax timing your severance? The fiduciary advisors at RIA Advisors can help you make the best decisions for your situation. Call us today at 855-742-7526. That's 855-742-PLAN. Or online at realinvestmentadvice.com.
In 1999, a parafiduciary group of financial advisors were busted by corporate giants for trying to operate in their clients' best interest. These men promptly escaped from a high-cost margin environment to the Houston Energy Corridor. Today, still excoriated by their former employers, they survive as protectors of others' fortunes. If you have a problem about preserving capital, if no one else can help, and you can find them right here, maybe you should hire the RIA team.
The Real Investment Show.
RIA Advisors Research is the envy of the industry. Our economic insights are featured on advisorperspectives.com, Fox Business, and MarketWatch. RIA provides advisors with marketing and back office support, objective research, and holistic, cutting-edge financial planning tools to meet your clients' needs. Want to join a winning team and be part of a fiduciary culture where you can do your best work? Then why haven't you contacted us yet? Go to our confidential advisor hub at realinvestmentadvice.com. RIA Advisors. Big enough where it matters, agile enough when it counts.
And now, another page from the Real Investment Advisors Investing Manifesto. Manage risk and volatility rather than trying to manage gains. You don't have to be right all the time. Long-term investing success is a 70% gain. Let us help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors. 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
So this morning, Brent Clanton hit my spot this morning. There's certain things that tip me over the edge, and one of those things is this whole generation that's been coming up about, kind of soft parenting and all this stuff. And anyway, you put this clip on my note page this morning. It says, how to speak like an alpha. Don't say, I like it. Say, it's pleasant. Don't say goodbye. Say, see you. Don't say, you first. Say, after you. Don't say, I don't know. Say, let me find out. See, this is the problem with all this. See, if we change this to how to speak like a Gen X, it goes, do not say, I like it. Say, F off. Do not say you're welcome. Say F off. Don't say goodbye. Say F off. That's the Gen X way. When men were men and men went out and hunted things. Hi, Danny. How are you? Speaking of hunting.
Doing well. Thank you. I'm here.
I'm a little disappointed. I was expecting Crocodile Dundee to come back from this trip and have alligator tooth necklaces or something, and maybe some tribal tattoo, where he was adopted by some tribe. Exactly.
You don't know what I'm wearing underneath this suit. I mean, come on now.
Yeah, but you look the same.
Yeah,
so
the same.
Glad you're back.
Yeah,
glad
my wife was upset too. It's okay.
You didn't come back married to some tribal princess or something?
No, I did not. Nope.
Well, I'm glad that I'm glad you're back.
It's amazing when the guys we're with you begin talking to these people and you realize how different we are in many different ways, but also how similar. And one of these guys is from Zimbabwe and old Rhodesia, and so we're talking. And it's like, yeah, but how many brothers and sisters do you have? 40. Wow. Okay. You're married? Yep, married. One wife, but I'm looking for 4. And I'm like, you're looking for 4? You're not going to have a very long life, my friend. Like, holy smokes.
I see this in other cultures where they have, multiples of wives. And even like there's this show that my wife watches on, like, I think it's Bravo or something like that, called Sister Wives. It's about that Utah family where he's got like 4. Of course, when that show first started, I told my wife then, I was like, this is never going to last. This is going to wind up, they're all going to get divorced. And they're all divorced now, right?
Oh, man.
So it's just completely fallen apart, which is what you'd expect. I mean, it's hard enough for me to keep up with my one wife.
Yeah. Yeah, I know.
I don't know how you keep up with 2,
And I value my life.
8. Yeah.
And I can barely keep up with 1, much less multiple.
Exactly.
It's like you hear about people that cheat on their spouses, and I'm like, I don't know how you do it. I mean,
I was like, why would you want to do it?
number 1, why would you want to do it? Number 2, I mean, they must have some really good time management.
Exactly.
I mean, I'm like, how did you figure that out? I mean, why, number 1, but 2, like,
it's just to me, and again, I guess because I'm getting old, it just seems like so much work. It's like I really don't want to put the effort into cheating on my wife because it's just way too much work.
Put the effort into fixing what may be broken if that's the case,
Right.
and it's probably you.
Probably.
Yeah.
So anyway, but hey, glad you're back.
Yeah, me too.
And again, so I'm glad you had fun.
It was good. It was good.
Yeah.
Certainly a different world. You get an understanding for and an appreciation for what we have here.
Yeah.
Traveled many different places, but especially when you get to countries that maybe aren't as economically robust, which, obviously being in the States, we are very, very, very blessed. But, I took a lot of pictures to show the kids, like, hey, this is a neighborhood. This is where people live, right? And, it's different. Like, you could go to Mexico and you may see, kind of a many little shacks next to a big mansion and then, many more. But there wasn't a lot of that. It was mainly just that.
Right.
And you start to think about what is the unemployment rate, talking to people, and, people are just, they're dying to get jobs. And, you look around and they have electric fences around crops. And like, what is that for? And it's like to keep the 2-legged animals out. And it's like, whoa, okay. Because it's just such a, impoverished society. And, that's, to give perspective, it's just, I think it's really beneficial for people to see these types of things because, we always want more. And while, I think, look, trying to build things and set your family up for success is great, but there's a whole part of the world that is just extremely suffering. The average minimum wage for 1 month, $311.
Yeah. And I've said this before, when you see a lot of these people on, social media or whatever complaining about, how America sucks and blah, 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 and I will bet you money that those people have never left the country because I spent 15 years of my life traveling and living in other parts of the world. And even more industrialized nations.
And you were in some of the better parts,
too,
right?
Exactly. Worse parts and better parts. And, even in the better parts, the ability to create capital like you have here is not available to you. You don't have that ability. And then when you look at the tax rates and everything else that you pay between your income tax and your VAT taxes and everything else, it's very hard for an average person to build wealth. And that's why they don't have that same kind of capitalistic mentality that we have in the United States because there's no sense in having it because you can't achieve it.
They regulate it to death,
exactly.
Or there's so many, it's so corrupt that you can't do it unless you really have an end. And that seems to be the problem with talking to lots of different people and the struggle that they have. But, amazingly beautiful, so many different things to see. I mean, what a neat area, but scary nonetheless. I told my wife, I said, it is amazing and terrifying all at once, right? In a lot of ways.
Yeah. I mean, because there's so many things that will kill you in Africa.
Yeah. Oh, yeah. We saw many of them.
Yes.
Yeah.
So,
up close and personal. So, yeah.
Exactly. So, all right. Well, anyway, glad you're back. Lots of stuff to get into, of course, this morning. China, like I said earlier, China's has kind of agreed now to, sit down with talks. This is kind of the first step. That's giving a lift to the S&P this morning. But the question is what comes out of this? Even, I guess, Danny, the question is even if they come to some agreement, will tariffs go back to where they were previously? I mean, the expectation is now is that because they're talking, and again, they've already agreed to about $40 billion in cuts already, kind of right off the top. But will tariffs kind of get back to the level they were? Will we get back to some normalcy? The good news is this is, the whole 125% tariff thing, that was all, and we talked about here on the show, that was always stick and carrot. It was never going to be 125 or 150% tariffs. That was just to get them to the table to start talking, which has now worked. And, to the frustration of a lot of people, but that's now worked. So the question becomes, what do the new tariffs actually kind of look like? Or do we get rid of tariffs with China altogether at some point?
Yeah, and I think that's going to be the struggle. And what does the market actually react? Many people think tariffs are priced in already, and they may be. But is it a sell the news type of scenario as well, where we could see this go a lot of different ways? I think you wrote, I think it was Monday, a really good article. It's essentially stating, kind of where we were, right? Talking about, from a technical perspective, and we're almost in a sense of purgatory, right? Right in between some moving averages. We could see it, we could see it go a number of different directions. It may just trade between those for some time. And that's the struggle when we're really dealing with all this economic headline versus economic data. And now we are beginning to see, as we saw last week, job numbers starting to decrease a bit, and that trend is going downward. So where does it go from here? Right. And, I talked to a lot of different people, and I think the struggle with many is that, hey, there's so much risk right now. If somebody's all in cash, they're saying there's so much risk right now, I don't think I can get in. Fair, right? But understand that this thing, just because we think it's going to do one thing, that doesn't mean it's going to happen, right? These things could be de-escalated very quickly. We could see push for tax cuts, for more deregulation. We talked about how Trump actually flipped this from the first term, where he did tax cuts, he did deregulation, tax cuts, then he did tariffs. Well, this time he started with tariffs. We've done a bit of deregulation, but there's still quite a bit that could be done. And so he's kind of holding those as a little bit more, a couple more arrows in his quiver, so to speak, so that he can come back. And if this does create all the volatility, which it has, and then he has something that can come out and say, hey, look, I've got another carrot here. And that's where, looking at this long term, the other problem is that is there any economic devastation that has already occurred right now? And I would suspect there has been. Now, how much is it? Is yet to be known. But when you look at companies struggling to figure out, okay, do we decrease headcount? I think many are while we've seen some layoffs, I think a lot are hesitant in the sense that they're afraid they're going to lay somebody off. Trump's going to roll back these tariffs. They're going to make a deal, and then they're going to say, shoot, we need these people now. Right. But also we talked about pent-up inventories. What is the impact on that moving forward? And then really, I think, when do you actually think you see this as a Q3, Q4, when we begin to see that, hey, some of these things are unraveling a bit? Yeah.
No, and that's going to be the real question. This is a good point. If you actually take a look at that latest employment report, we added 1 million full-time jobs in that report of native-born workers. So there was a very quick shift within the last reporting period from hiring non-native workers to hiring native-born workers. And hiring on a full-time basis, we actually saw that. But full-time employment relative to the population and the working age population is still declining. So, we're seeing a bit of the shift in the employment makeup, to your point, and we are seeing a reduction in temporary employment. So, and again, that's not surprising. If I'm a business owner and I'm concerned about my profitability, my earnings, et cetera, my easiest employees and the ones that I'm going to get rid of first are my temp employees. It's like, hey, look, I don't need your help anymore. We're good. I'm going to take your temporary work and I'm going to put back on my full-time employees, because employers want to hang on. Training a full-time employee is a very expensive process. Because you got, and again, this is why companies want to hire you and treat you well and keep you for a long time, because that's a very expensive cost to train somebody to do a job. And so they don't want to let those employees go until the last possible minute. So it's get rid of temporary workers first, which we're seeing right now. So that accounts for the slower economic environment. But then the question will be if we start seeing full-time employees get let off in the next few months.
Yep. Because how much of that is demographic in general?
Like retirees?
Yeah.
Not as much as you would think.
Yep.
Yeah, because you see the numbers. Retirees are working a lot longer than
They
not
are.
retiring. All right, we'll come back after the break. Pick up Danny Ratliff. Don't go away.
The Real Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
Are you a financial advisor sneaking peeks at our stuff? Instead of trying to do it all yourself, why not just join the team at RIA Advisors? Our full-service organization can provide you with the support, unparalleled research, and tools for managing your clients' money and honoring the fiduciary pledge of putting clients' best interest first. Don't take our word for it. Talk to the advisors that work with us. Want to come win with us? Go to our confidential advisor hub at realinvestmentadvice.com. RIA Advisors, big enough where it matters, agile enough when it counts.
If you're working and looking to retire soon, a Medicare special enrollment period is in your future. Understanding Medicare choices, enrollment deadlines, and costs are essential to your overall standard of living in retirement. The wrong choices can cost you thousands in penalties. Make sense of Medicare's alphabet soup with RIA Advisors' online resources and one-on-one partners to help secure the healthcare insurance choice that is right for your lifestyle and budget and avoid gaps in coverage. Click on the insurance tab at realinvestmentadvice.com today. realinvestmentadvice.com.
The Real Investment Show.
And now, another page from the Real Investment Advisors Investing Manifesto. Bulls win in bull markets. Bears win in bear markets. Eagles soar above and take advantage of opportunity. Let us help you soar as you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
Can't catch the whole show now? Listen to our podcast later at realinvestmentadvice.com.
Talk about, well, why do you own gold? Well, I own gold because if everything collapses, it won't matter anyway. You're not going to survive more than 7 days. I don't care if you've got gold or not.
The Real Investment Show podcast.
You don't know how to go out and forage for food. You don't know how to go out and hunt. You've been sitting around your house watching television with your feet propped up, drinking beer for 12 years.
Same show, your schedule.
Danny Ratliff is one. He's going to survive just fine. He's in South Africa right now. He's out there with a knife and Rambo paint on and stalking predatory animals. He'll survive just fine. My next door neighbor with the drill, he ain't gonna make it. No chance.
At realinvestmentadvice.com.
If economic Armageddon happens, pack it up, buddy. You're done.
The Real Investment Show.
Attention Chevron employees and anyone else receiving or considering a company severance package. We know the process can be intimidating. What should you know to maximize your payout? Lump sum or pension annuity, retirement plan rollover or not? What about tax timing your severance? The fiduciary advisors at RIA Advisors can help you make the best decisions for your situation. Call us today at 855-742-7526. That's 855-742-PLAN. Or online at realinvestmentadvice.com.
The Real Investment Show YouTube channel has all our videos ready for your easy access. Now with the new and improved Before the Bell reports, plus each day's radio shows, Technically Speaking Tuesday, Financial Fitness Friday, and the latest analysis from Lance Roberts and Michael Leibowitz. Subscribe and bookmark our YouTube channel at realinvestmentadvice.com.
You're listening to The Real Investment Show.
It was funny yesterday. John Penn and I were on the show talking a little bit about AI and the impact on employment. And, Danny and I were just talking a little bit about, full-time employment here a second ago. And yesterday we were on the show talking about how, AI is going to, create this increase in GDP per capita, but that's a bit of a misnomer because 10% of the population that is utilizing and implementing AI to build wealth and prosperity, they'll have the GDP and it'll mostly be contained within their per capita. And, the bottom 80, 90% may be struggling to find work. But it was funny because right after I said that, Paul Tudor Jones was interviewed and he came out and said, yeah, in the next 20 years, AI is going to kill 50% of humanity. So that's also a way to boost GDP per capita, which is just to reduce the per capita part of GDP. So, yeah, a couple of ways to go for that.
Well, I had a conversation actually with a client last night. We were talking about it. They said, what is the overall impact? What can I tell my grandkids to do? I was like, well, I mean, you could go get a trade. That's really an area that's needed.
Right.
But, we had the discussion, look, back in 2000 and Y2K, everybody thought the computers were either going to blow up the world or rule it, right? Mm-hmm. Nobody knew what was going to happen and how things were going to work. And we've seen technology advance quickly. Now, we can argue it's probably been expedited as of recent.
Sure.
Where it's
well, that's what
just
that's
that much
Moore's
quicker.
law, right?
Yeah. We have the arms race of technology at the moment. But at the end of the day, I mean, I think that, unless I mean, here's the worst case scenario, right? You're a socialistic society. Nobody can make any money. You're being run by robots. And I think that's been the concern and the fear forever. But I think that, I'm not going to say it's unfounded, but it's a long ways off.
Right.
And man is not going to let robots rule them.
Yeah, I've seen Will Smith and iRobot. I see how that turns out. So, actually, it was funny because there was an actual video out. There was a robot that these two researchers were working on.
Yeah.
And there was a glitch in the software, and the robot starts freaking out and starts attacking them, and they're trying to figure out how to turn it on. So, yeah, I'm like, yeah, that's how this ends up. I've seen this movie already before. So we'll see how this turns out. Anyway, so, kind of back to markets and what's going on here. And again, as we just talked about a second ago, there's, the markets are very bullish right now. As I noted this morning during our opening segment, retail investors have absolutely piled into the markets. They've been buying, ever since the market declined during that dip. They were piling into equity funds, equity ETFs, 0-day traded options, individual equity stocks. And I find that really fascinating, Danny, because it's a real dichotomy between a couple of things. One is you see this retail flow, which is a lot of younger investors that are piling into these positions, because if you take a look at the American Association of Individual Investors, who tend to be older, they've been very bearish. In fact, they're still very bearish. That bearish sentiment is at some of the highest levels on record right now, and they're very, very concerned about the markets. And then we just look at our swath of clients, and you were just talking about a second ago. I was like, I don't really want to put money to work right now because of all this, what's going on with, tariffs and trade and the markets and all this. It's very different. It's a kind of a very unique structure where we've got even professionals have been very bearish here.
Yeah.
In terms of allocations, et cetera. So you've got this older generation that have been through bear markets going, I think I'm going to sit this one out. And you've got this younger generation that just can't get enough of it right now, just kind of at the Wall Street casino and just buying everything they can buy at the moment, expecting this market to just go right back up to all-time highs.
Well, I think that's a fair assessment, but I will say, it's not necessarily an age demographic issue. It's really, it's kind of part and parcel where you have, half of the people right now are just saying, hey, we've got to just hunker down. This is going to be terrible. They feel bad about things. And the other half's like, hey, this is great. We're going to go buy some stuff on sale. And, the strategy with both is it's not an all or nothing. I think that's one thing we need to understand is that we can get way over our skis very easily by saying, we're going to go all the way in and put everything in right now. What if we get another 10% drop? What if you get back to the lows, right? And that holds support. Or maybe we make new lows. Right now, there's nothing suggesting that, we're falling off a proverbial cliff, but we could if other things break. Now, that's the challenge. The other side of this is that, okay, hey, you get out, but the market begins to improve. And we've seen that, right? I mean, usually human nature, we want to get out at the worst times. We want to get in at the best times. We're usually a little bit late on either one. And it's okay if you're doing it a little bit at a time. And I'm not talking about dollar cost averaging per se, but kind of, right? Where people just say, hey, every month we're going to put X amount in. We're going to increase our exposure. That's a great way to take advantage of it. But what we find, if the average person who's dollar cost averaging can't do it, because if the market's down, they're like, oh, no. Well, that's when we want to buy, right? It's like if you have a 401k and we get into a bad market environment, hey, let's protect the funds you have, but with any additional funds you're putting in, let's start getting aggressive. Let's start buying more while it's down. And unfortunately, that's the toughest part to do.
It is.
Warren Buffett's always said, buy low, sell high. And unfortunately, and everybody knows that it's one of the number one rules of investing.
Well, it also just makes sense. I mean, the whole point of investing is to buy stuff at a low price so you can sell it at a high price. But we forget about that, right? We buy everything at a high price and forget to sell it.
But very few can do that
Exactly.
on a disciplined manner,
right.
With and rationally, I get it, right? If things are bad, you think they're going to get worse. It's human nature. We don't want to go put, and especially if you have money in the market, you think, well, man, I'm putting, good funds after bad funds. Well, that may be the case, but, I visited with somebody else yesterday, said, look, I know long-term this is going to be better. The question is, how long do you have to wait?
Well, and it's not just how long do you have to wait, it's how long can you stand to wait.
That's right.
Which is, kind of looking at this market now. We've laid out the premise that this market right now that we're in may be a lot like 2022, where it was, bounce, decline, bounce, decline, bounce, decline. And finally it bottomed and then turned back up and did well. And I think there's still a good viability of that. And the problem is like I can buy this dip and maybe I'll buy the next dip, but the third dip I give up, right? And then I sell everything, and that's generally the dip that's the bottom. And so to your point, it's always about having to navigate your way through these declines so that you emotionally just don't get washed out. And this could be, and we wrote that article, we brought up a few times now, called Curb Your Enthusiasm, back on January the 7th. And we said this is going to be a year of high volatility and maybe markets go nowhere. And if this market kind of continues like this through the summer and we get into the fall and it's just this sideways kind of drudge, up and down, up and down, up and down, it's just going to literally exhaust a lot of people. They're just going to be like, you know what, I'm just done. I don't need the stress in my life. Just get me out and I'll come back later.
I think people are there, or they were there. Now, since we've seen this little bit of a run-up, I think people are feeling a little bit more energized. But I think there's been a lot of exhaustion out there. There's just atrophy in general where people are just like, I just can't do anything. This is too much.
Headlines.
Well, it is. We were talking about looking back at markets in general. And, I did this back then. Okay. Well, let's talk about what was different, especially people who have been in the market for decades. Now we're getting all this information at our fingertips. Now everybody is an expert, regardless if they really, truly have experience. I mean, we look at all these people that can gather a great following, but have they been in the weeds? Have they actually physically managed money? Or are they simply a talking head that can attract views? That's one thing I think is always difficult to separate the two. And then, the same thing when you look at, if you look at CNBC, Fox Business, and, this guy said this, and these guys are saying they're very, very smart. Okay, well, what do they do? Many times people are talking their book. And so that's where we have to, continuously separate and understand what does this mean? What does that mean? And I think it's always good to get, both sides of the coin and say, okay, here's the conflicting argument. And we like to look at that. Like, we may have a very high conviction in one thing, but I want to know what everybody else is saying about it as well. Say, are we looking at this wrong? Is there something that we don't see? And I think that's healthy to do so. And then you can create that, kind of pros and cons list and make a better informed decision. But you have to be careful where you get your information.
Right. Well, that. And then, again, having some type of, structure behind that to make sure that, you're just not buying whatever's just going up. And again, we see this a lot is that people, pile into trades that are going up and they abandon trades that are going down. And so they wind up buying high and selling low, right? Yep. At the same time, right? They're selling the stuff they should be buying and buying the stuff they should be selling and taking profits in. And we see that a lot. We're seeing that going on in the markets right now with certain asset classes, and people are, chasing, certain asset classes higher, going just, I think this is going to go to the moon. They're trying to rationalize why that is going to be the case. And they're ignoring the assets that are now cheap, and you should be looking at buying them.
Correct.
And that's kind of the nature.
Well, and it's that sector rotation to some extent, but also, like you said, it's just the nature of people. But, we've talked about this, going back to the plan. What does that look like? How, remembering the ultimate goal for funds. I think everybody gets tied up, especially if you trade frequently. Most people get tied up in, how much did I make today? How much did I make last week? How much did I make this month? We got to start to stretch that out a bit and understand what does the road look like? It's going to be bumpy at times. It's going to be really smooth at times. But there's going to ultimately have to be, do we get to the destination? And that should be to reach your goals. And that, I think, is what, with all the media, all the news, I mean, you talk about it, right? Financial planning, budgeting, all that stuff is not sexy, right? Everybody listens to this show because you want to hear what Lance has to say about markets on a day-to-day basis. Not because you want to know what the next, financial planning news is. Now, I know there's a lot of you out there, probably like 99% that do, because, Lance is, But in general, it's not the thing that, it's not the clickbait.
It's not.
It's not.
Right. You have to figure out a way to come. I'm trying to come up with the title for clickbait for financial planning. What disasters in financial planning? Tune in tomorrow.
Well, but it is the disaster, generally speaking, is our own selves.
Yeah.
Right? It's just the behaviors.
Well, that, and we build a financial plan. This is great. Then we put it on a shelf and never look at it again. And then we deviate from the financial plan and it's worthless, right? So.
Yeah. And that's something, you talked about yesterday. Like, well, you said your job would be obsolete. And I don't think that's true.
By
I think,
AI, yeah.
Well, by AI, right? And they're like, well, what you guys do won't, because all the different moving parts, things you have to say. Well, listen, that goes with everything, but you need to be able to articulate it. You need to actually be knowledgeable. You need to put it all together. And I think that is the challenge, and then help guide people to the right direction.
That's correct. All right, we'll come back. We're going to talk about the first casualty of the GLP-1 war and a couple other things. Don't go away.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
The Real Investment Show YouTube page has all of our videos ready for your easy access. From 3 minutes on markets and money to each day's radio shows like Technically Speaking Tuesday, Financial Fitness Friday, and the latest analysis from Lance Roberts and Michael Leibowitz. Subscribe and bookmark our YouTube channel for The Real Investment Show, or just click on the show links at realinvestmentadvice.com.
RIA Advisors Research is the envy of the industry. Our economic insights are featured on advisorperspectives.com, Fox Business, and MarketWatch. RIA provides advisors with marketing and back office support, objective research, and holistic, cutting-edge financial planning tools to meet your clients' needs. Want to join a winning team and be part of a fiduciary culture where you can do your best work? Then why haven't you contacted us yet? Go to our confidential advisor hub at realinvestmentadvice.com. RIA Advisors. Big enough where it matters, agile enough when it counts.
The Real Investment Show.
Attention Chevron employees and anyone else receiving or considering a company severance package. We know the process can be intimidating. What should you know to maximize your payout? Lump sum or pension annuity, retirement plan rollover or not? What about tax timing your severance? The fiduciary advisors at RIA Advisors can help you make the best decisions for your situation. Call us today at 855-742-7526. That's 855-742-PLAN. Or online at realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. A passive investment portfolio requires active risk management. It's not a choice, it's necessity. Diversification doesn't protect against risk of loss. Let us actively help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
So we've talked a lot about GLP-1s, which are the weight loss drugs. Of course, there's been an ongoing battle between Eli Lilly and Novo Nordisk and others between getting drugs to markets. Eli Lilly just recently had their big win with the FDA through their third trial phase of getting a pill version. GLP-1s are injectables right now. So they've now passed the third phase of the FDA trials for a pill version, which is a huge win for Eli Lilly. But we never talk about the casualties ultimately of weight loss. And I saw this really great article. I believe it was in maybe Vanity Fair, talking about how there's been a big protein craze lately. If you're on TikTok or any type of social media, there's just constantly people on social media. There's a whole influencer class now on how to incorporate more protein into your diet because it helps you lose weight. If you should be eating about 1 gram of protein per body pound, and it helps you lose weight. And then and of course, a lot of people are now that they're focused on losing weight because of the GLP drugs. And of course, there's lots of positive side benefits from these GLP drugs, from helping delay Alzheimer's, dementia, because it reduces inflammation, it improves blood flow, just a whole lot of different, positive benefits other than just, helps curtail what's the our old friend, the diabetes. The diabetes, yes. But helps curtail that. And so there's a lot of positive benefits from this that are being discovered from these GLP-1s. But my question is always, who's going to be the first casualty out of this war? And we now know who that is. It's Weight Watchers. Weight Watchers has, this is from the Wall Street Journal this morning. Weight Watchers, whose dieting and wellness programs were once an essential part of the U.S. fitness culture, has filed for bankruptcy to adjust to the increasing use of drugs like Ozempic for weight loss. And I was curious because, a lot of people, you see a lot of commercials on television, for the weight loss drugs, and they have all the, not weight loss drugs, sorry, for Weight Watchers. Oprah Winfrey, of course, the big spokesperson for, that was, yeah, sorry, didn't mean that. She was a large spokesperson as well. She was a well-known spokesperson. That's what I'm trying to get to. But she was a spokesperson for Weight Watchers. Did a lot of commercials. And again, of course, you go to the store, and if you've been to the freezer aisle lately, it used to be you go to the kind of the freezer section, and there was kind of just a couple of different versions. There was like Weight Watchers, and then maybe a couple of other small brands of kind of diet-ish type food in the freezer section. Now, if you go there, there's just tons of options. This is because this whole last couple of years, really when these GLP drugs started hitting the market, people really started focusing back. And look, this is a good thing, right? I mean, you've got a lot of attention now of people finally paying attention to their health.
Yep.
And this article in Vanity Fair, was interesting because they were blaming this focus on protein and health, this focus on health, as a MAGA type influence because of Kennedy, of course, taking over HHS, trying to improve, make America healthy again.
Wait a second. So this is a bad thing that people want to get healthy now.
Yeah. If you're wanting to be healthy, you're a right-wing conservative, right? So that was the Vanity Fair's view on this. Is not only right-wing conservatives are focused on their health and wellness, which is ironic, but.
I don't want to go down there. No.
Yeah, but it was an interesting because again there has been over the last couple of years there's been this huge explosion, just tons of brands coming to market. Influencers are making a lot of money on social media promoting brands and promoting products, promoting health and fitness, those type of things. But this is a good thing. I mean, we've talked about for years that one of the biggest problems in America is the obesity epidemic, and that has big impacts on financial health and wellness in retirement because, again, we talk about, hey, I want to work, I want to save up money, and I want to retire. And then you get into retirement and you're spending all your time in the hospital and you're spending all your money on medical bills because of all these medical issues that you start developing on later in life because you didn't take care of yourself when you were younger.
Yeah, I mean, it sounds cliche. We've talked about health and wealth for years, and now it seems like mainstream media is finally beginning to catch up to it. But think about this. It's not only money out of your pocket, but then you think about Medicare, Medicaid, all of these services. And so if we're trying to reduce the debt in earnest, I mean, you have to go out and, think of other ways. And so we've done ourselves a disservice. Now, I did see that RFK just banned a lot of different things, and he's given them some time frame from food dyes to specific preservatives, things of that nature. And, that's one thing when I was overseas last week, I noticed I would look at just contents of stuff. Like, we don't eat a whole lot of packaged goods. Not to say we don't have them and we eat them sparingly, but, if we're in a bind, kids need something for, they're running from place to place, they may. But just looking at the package of contents is amazing, like the ingredients. Very little compared to what we have here. And it seems like it'd be common sense to follow suit to something that's maybe a little bit more thoughtful in nature, right? But we want things that'll last forever here. I'm sure there's a number of other reasons why they may or may not do something, but it'll be interesting to see how this all plays out because I think that would have a direct correlation on health. And that's a great thing. And I don't care what side of the aisle you sit on. You should take care of yourself, for your family, for your longevity of your plan. And a lot of people say, well, they're going to die earlier. Yeah, but guess what? They're going to spend a lot more money in the interim before then than somebody who's generally healthy. Now, listen, bad things happen to good people, and they certainly happen to healthy people as well. But as a whole, if we can get ourselves together as a country, man, I mean, I think we're much better off. And you do see there's all these different ways and levers that they can pull to hopefully reduce the debt. And I think that would be a great one for them to put a lot more emphasis on. But, think about Weight Watchers. What a bad casualty, right? Weight Watchers was really about making good decisions.
Right.
So now we've done it where, and listen, I know plenty of people who've taken Ozempic or the off-brand or whatever it may be. That's fantastic, right? If it's helping you, good. But understand side effects potentially. But number two, for me, it's about the behaviors. Is it helping you create better behaviors? That's where I think that we need to be ultimately, where say, hey, a lot of people want to eat their cake and not get fat, right?
Right.
And
I do.
Well, of course, me too, right? But do you create the habits around that to continue that weight loss so that you're not relying on something else? And if that's a great Kickstarter for you, fantastic. If it helps reduce all of these other particular things that can arise, diabetes, you talked about some of the other ones, neurological stuff, great, go for it.
Yep.
But
again, just losing, great. I used to have a diet coach that I went to, Keith Klein, for a long time. Great guy. We used to have him on the radio show.
Dr. Klein used to be here, right?
Yeah. But he would always say, talking about what you're saying is that, just make better bad choices, which is like if you're going to have he says there's nothing wrong with having a cheeseburger. Just have it without mayo and without cheese. Or just have a hamburger.
But don't do it every day, right?
And don't do it every day.
Enjoy it, and it's a once a week deal, and you want to have a cheat day or a meal, go for it.
Absolutely.
But
Nothing wrong with that.
If you can make better habits along the way, it's not as consequential.
Right. And then, but his other point is like, you can lose weight, but if you don't match your weight loss with, some exercise and some other, benefits, you'll be just a skinny fat person. Because you need, in order to have a healthy retirement, you need good, strong bone structure, which comes from lifting weights. You need a healthy cardiovascular system, which comes from taking walks and getting some exercise in. You've got to you can't just, the GLP-1 drugs are great for helping you lose weight, but you also have to your point, you have to go to the next step, which is also begin to exercise again and, get back out there and be active because we all dream of this retirement where we're going to go sit on the beach and enjoy, playing with our grandkids and doing all these great things. But, I can tell you, I meet with a lot of people who they can't get out of a chair hardly, much less go run around with their grandkids or go, enjoy trips to the beach or whatever their goals were. They can't do it because they haven't taken care of themselves physically.
Yep.
And now all their money is being spent in hospitals, on medications, on, trying to fix problems that have developed, over the years of just bad habits. And again, look, there's lots of reasons and reasons why this happens. We're stuck behind a desk all day, we're working, we're tired, all those type of issues. But, there's consequences that we pay for all of that, not only just health-wise, but also financially as well.
Oh, they're all great excuses. I have them too, right? But you got to figure out a way to do it maybe better, right? Is it following an app and making sure you're getting so many steps in each day? Y'all didn't know this segment was going to go the health route. Is it, like I bought a standing desk at home. So if I'm working from the house, I am standing. And it helps my back. It helps just in general. I don't
you
feel
need one of those
tired.
treadmills that you walk on while you're standing.
I've looked at those. I just don't have enough space. Those are nice.
Yeah.
The walking pad, I know Connie has one here.
Yeah.
Yeah.
No, they are pretty neat. I just, it's hard to do, interviews and walk at the same time.
Yeah.
So
well, if I'm talking to people in front of a screen, they don't want to see me, bobbing up and down.
Breathing heavily.
Yeah.
So, yeah. But anyway, all right. So, but the point about all this is that one, just disclosure, we own Eli Lilly in our portfolios, but they have claimed their first casualties, which I was surprised it would be Weight Watchers. There's a lot of other smaller brands that I thought would go first. I was actually kind of surprised by the news that Weight Watchers is filing for bankruptcy.
Yeah.
So, because they've been around forever.
Yeah. I mean, as long as I can remember.
Yeah.
Every shopping center.
Pretty much.
Yeah.
Yeah, absolutely. But anyway, point is, take care of your health. It will pay financially if you do down the road. All right, that wraps up the show for today. Danny, glad you're back alive in one piece.
Me too. Thank you.
You didn't get eaten by a lion.
Did not.
We had a pool. I lost.
Oh, man. Should have taken the under.
All right. Y'all have a great day. Be back here tomorrow with Michael Leibowitz. We'll go through what the Fed said, top to bottom, and we'll figure out what that means for the markets next. That'll be in tomorrow's edition of the Real Investment Show. Have a great day.